Thank you for joining us today for our Electronic Retirement 101 sessions. This is session 4 of 4. Today's topics will include adjustments, statute of limitations, leaves of absence, and records retention. So without further ado, Beverly Snyder, the Account Services Manager.
Okay, what is an adjustment? We've talked about correct compensation reporting. We have talked about your members earning service. We've talked about eligibility. What happens if we don't report correctly or we miss something? Well, we have a whole team of people. Their specific job is to help you make corrections to any of your member files because we want them to be correct. We want their retirement to go smoothly. So make sure you know who your account analyst is. Their only job is to help you do these adjustments. What is an adjustment? It's a correction to a member's account for any prior pay period. Again, anything outside of your current pay period. We have quite a few places that adjustments come from. It could come from you, the employer. Maybe you realize that you missed something. You give us a call. We're going to help you fix it. It could come from the employee themselves. They could get their statement. They could realize that they're missing 6 months of service, so they could contact our office. We'll start that process to help them figure that out. It could come from the contribution file. Maybe you forget to report them correctly. Again, that's going to be the employer, so you're going to let us know about that. Compliance audits. We have our compliance teams that come out. Maybe they come out and in doing their testing, they can help you identify if anything's been missed. Or maybe your member comes in for a retirement estimate, and as we're going through preparing them for retirement, we might notice something missing. So they come from a lot of different places. Some examples of some of the adjustments that we would help you do: salary differences. Maybe your employees got a pay increase and you forgot to start it, so you're going to have some retro pay that we need to go back and put on pay periods. Maybe you have some additional payments that you forgot to report: extra work for extra pay, bonuses, missing contributions. Maybe you've got somebody on military leave and you're choosing to wait till they come back to put that service in place. Or maybe I hired on for you and you did not certify me or get me on the contribution file for the 60 days. So if you didn't get me started on time, that would be a missing contribution and we would need to go back in and fix that. The other thing, continued reporting. Maybe my eligibility status changed. Maybe you were reporting me as an ineligible and now I've become eligible. So, but you forgot to start that money on time, so we might need to go back and get that corrected. Now we've talked about how your members accrue their service. Again, they accrue service based on the contribution periods. So if you're biweekly, they need to be receiving 26 contributions a year. If they're monthly, it's 12. If they're semi-monthly, it's 24. When those contributions come in at the end of the year, they've got their 1 year of service. Just wanted to point that out. Here's what some adjustments might look like, just to give you an example. It appears that this employer right here didn't report this employee for some reason on period end date 2/14/2015, but look what they did on the next pay period. It appears that they doubled it. So the employee got their paycheck, but what did they not get was their service out there to the side. So to do an adjustment, we would come in and we would break that out. We would move that money up into the pay period that it should have been in, and then look out there to the right, the employee receives their correct service. Now, how do you submit your adjustments to the retirement office? This process has changed a little bit. The first thing that you're going to do is you're going to contact your account analyst and you're going to find that information on your employee management center. They'll tell you who your account analyst is. You're going to let them know that you have an adjustment that you need to send in. Your account analyst is going to send you an encrypted email because we want to protect that information. And you are going to reply to that encrypted email and you are going to send all of your information to do an adjustment to the website that you see, or the email address that you see on your screen, adjustmentrequest@urs.org. When you send that information in and include all of that backup documentation, we are going to review it, verify it, we're going to get it logged so that we can properly track that adjustment, and we are going to get you an invoice or the refund issued to you within 30 days of receipt of all of your information. One thing I want to point out to you before we move on, effective January 1st, 2017, the interest rate on adjustments has changed from 7.5 to 7.2, but I want you to keep in mind that if you send your adjustment in and we get it corrected within 90 days, the retirement office does not charge you any interest on that at all. So you have an adjustment you need to do. You want to get it sent in. What do you need to send us? We need you to send in the salary with the pay rate and the hours worked. We need you to send the salary in to us broken out by your period end date. Remember, we've talked about this. The employee earned service based on the period end date, so we have to break it out by the period that it was earned, and make sure that when you're providing that information, you're letting us know if this member is receiving benefits or not. We're going to be the verification process for you, so if you provide us all of the information up front, that speeds the process up. We do have a worksheet that we use here in the retirement office, so if you would rather use the worksheet that you're seeing in front of you, all you have to do is contact your account analyst and ask them for the adjustment worksheet. They'll send it over, you can fill it out, and we will get going on taking care of that for you. A couple of other things I want to point out: when we're doing our adjustments, we only bill you for what is required by the law. The billing statements are emailed to the contribution billing contact, and we do have a $25 threshold. So if you have an adjustment that is very small and the contribution amount that you would need to pay is less than $25, we typically do not process those adjustments unless you request that we do so, but obviously we can do that for you if you would like us to. The next topic I want to talk about is the statute of limitations. It's a 4-year statute of limitations that became effective on May 10th, 2016. This statute of limitations applies to both the employee and the employer. And so the previous 3-year statute of limitations that we were using prior to this was just on a contractual basis that was handed down by a court ruling. Now we actually have the 4-year statute of limitations that is part of the retirement law. Now, what does the statute of limitations do? It's intended to reduce the uncertainty about the future, to avoid disrupting settled expectations, reduce the cost of measures designed to guard against the risk of untimely claims, and to allow a little bit of peace of mind. You, the employer, don't like to be surprised when we come back and say, "I'm sorry, but you forgot to make this contribution for this employee 20 years ago, so here's a very large bill for you. That wasn't in your budget." So we're trying to reduce that. And the flip side, we're trying to reduce impact for the employees when they're coming in to retire and something is not correct on their file. We're not going to take that away from them if it's outside of the 4 years. So an example of that would be, you reported incorrectly for me 20 years ago. Now I'm coming in to retire, and retirement says, "Oh, I'm sorry, these 5 years were all ineligible. Oops, your employer made a mistake." We are not going to take all of that service away from that member if it's outside of the 4 years. We have a process in place now for adjustments. If your member gets their statement in the mail and they see that they are missing a year of service, they are going to contact our retirement office, and we have a specific form that we use now. So they're going to contact our retirement offices and say, "Hey, I am missing a year of service." We're going to provide them with a form. They're going to fill the form out and provide the information: "I'm missing this year of service with this employer," and then they're going to sign it. On there is going to be a box: "Are you willing to pay for this adjustment?" If they mark the box no, they bring the form to you, and then you're going to fill out the employer part of that form. Yes, the employee worked. Here is their hire date. Yes, they were eligible. Yes, we made a mistake. It's outside the statute of limitations. You're going to get the same question: "Are you willing to pay for this adjustment?" If you mark no, and it's outside the statute of limitations, we are going to image that information, but we are not going to process an adjustment. If you mark yes, then we would process the adjustment and send you a bill. If it is not outside the statute of limitations and reporting was not done correctly, then we would do a correction on that. So going on with the statute of limitations, when does that 4-year clock start ticking? The 4-year clock starts ticking with the statute of limitations at the point of discovery. What that means is the point in time when the action for the claim was discovered, or more importantly, when it reasonably should have been discovered. The statute of limitations is not always 4 years. In some cases, it's going to be 12 months regarding savings plans, because we are not going to go in and make any adjustments to employee savings plans beyond the 12 months. And I'm referring to a 401k plan. Now, responsible actions for the employee: know and understand your benefits and your rights. If you're getting your statement in the mail and you notice that you're missing service, don't wait 30 years to let somebody know about that. If you don't know, they need to ask. Review your statements for accuracy and let the retirement office know if you find a discrepancy. Responsible actions for the employers: make sure that you're providing employees with clear and complete benefit listings. Make sure they know if they're eligible for URS. Make sure they understand if they're not eligible and why. Conduct a timely review of eligibility for your employees and status changes to make sure that you're reporting them correctly. One extra thing I want to point out, employers, is that this statute of limitations is not a free pass. There is a tolling provision in there. And what that tolling provision says is that you cannot misrepresent your employees. If they are eligible, you have got to certify them eligible. If they are ineligible, you would do that also. You have to make sure that you are letting them know what their status is, and you have to be monitoring your employee list and making sure that you are providing benefits when they become eligible for those benefits. Okay, a couple of reminders with the statute of limitations is the URS will limit actionable claims for up to 4 years. For the employee, they must file claims within 4 years or seek direct redress with the employer. For the employers, you must file claims within 4 years or seek direct redress with the employee. And reminder, the tolling provision: it allows actionable claims outside of the 4 years if there is any cases of fraud involved. Okay? The statute of limitations is very new. If you need to know how it applies to you directly, please, please, please give us a call. Moving on, let's talk about a leave of absence. The form that you are looking at, this is called our leave notification. Now, what you would do with this leave notification, you would use it for a variety of reasons. What this form is doing is it's telling us for your eligible employees that you are reporting retirement contributions on, it would tell us why the contributions were stopped, or if their earnings drop below eligibility. It could be for military leave, it could be FMLA, it could be for a short-term disability, it could be for a workers' comp. Whatever the reasons, if the contributions stop coming into our office, or if they are drastically reduced and it appears that that employee has dropped below eligibility, you're going to fill this form out and you're going to put it on file with our office. It's filling in that hole with your employee service. So the middle section, you're going to tell us when they go out on the leave. When they come back, the bottom section is going to tell us when they come back. Again, I'm going to refer you out to the webinars. We have a monthly webinar specific to the leave of absence form. And if you need additional information on the leave notification, please go out and watch that webinar. Long-term disability is a different form. You need to notify us when your members go on long-term disability, and there's a specific form that you would use that you would submit to our office, and we will get your member file documented. Next and finally, I want to point out the record retention law. With the retirement office, the record retention is 65 years from the date of hire, 3 years from the date of death, or 3 years from the date of retirement. When members come in to retire, 30 or 40 years later, we always need to go back and verify employment dates and salaries, that type of information. And so our record retention law requires you to keep that information on file at your office. How you keep it is completely up to you, whether it's paper or whether it's electronic, but you are required to keep it. When members come in to retire, you will receive a form called the verification of termination from our office. When you receive that form, that indicates to you that you have a member that is retiring. You have to take that form seriously, and that's where you're going to reference back to all of your information that you've retained to put those dates in there. And a member cannot retire until we receive that verification of termination back. So if you ever receive those forms, make sure you make those a priority, because somebody's pension check might be relying on you sending that form back to our office. Okay, there are the basics of the retirement laws that we need you to know. Of course, with every topic that we have, the information is always more in depth, and so that's where I'm going to push you back to that knowledge corner and into those webinars. Every topic that we have talked about today, we have a webinar on that is 30 minutes or less. It will provide you a lot more information on those topics, so please go out and watch those webinars. Again, here are some phone numbers for you. If you have additional questions, if you've had your pad and paper out and you've got questions you need to have answers to, you are more than welcome to email me or call me. My direct phone number is 801-366-7493. My email address is Beverly, Beverly, .Snyder, and that's SNYDER, @urs.org. Here are some departments that you can also call. Our retirement department, you'll see their 1-800 number right there. I hope you're writing these down. Retirement would be able to answer questions related to phased retirement, post-retirement, or if you have members coming in to retire, they would be the ones answering those questions. The next one we have are the defined contribution, the savings plans. If your questions are related to 401k plans or 457s, IRAs, that's the 1-800 number that we would like you to call. Next, you've got your employer support team, and that is the team that I work for. It's the records management department. Under records management, we've got your team that posts your files. We've got your adjustments. We've got the compliance team. So all of the employer support that you need regarding your day-to-day activities, you can call that 1-800 number right there, and one of our team members is going to help you out. The final number that you'll see on the screen, that's your retirement planning advisor. All areas across the state have an individual retirement planning advisor that will come out and meet with your employees and talk to them about retirement. That's the number to call if you would like to get a hold of your representative to come out and maybe meet with you at your organization. I really appreciate you taking the time to listen in on this Retirement 101 training today. I hope it's been very helpful for you. Again, we offer these in person in our office every August and February, and in October we have a team of individuals that go out and conduct the focus groups, and they will be doing Retirement 101s while they're out on the road at the same time. So watch your email, watch the website for the employers, because that's where we try to provide you all of that additional information to let you know when these trainings are coming out to you. Again, I appreciate you listening to the Retirement 101 training today. I look forward to seeing you when we're out on the road doing trainings. If you have any questions, please contact our office.
Thank you for joining us for session 404, our final session on our Retirement 101 training. We hope you found this information valuable. The Retirement 101 is offered at our office twice a year, every February and August. We also offer comprehensive trainings across the state during the month of May, as well as monthly webinars every third Wednesday of the month. If you have any additional questions on any of the topics that we have discussed, please feel free to contact us here at Utah Retirement Systems. You can reach Beverly Snyder at 801-366-7493. You can reach Jason Stegen, our compliance auditor, at 801-366-3976. And you can reach myself, Connie Ventura Smith, at 801-366-7447 with any of those additional questions. Thank you for joining.